Welcome to Wisdom Education Hub. I really thankful to you that you have given a wholehearted support to last video. Today I am going to take the introduction chapter of plus one accountancy, that is introduction to accounting. Every businessman want to know about their financial position. They are running the business to earn profit. A business person always want to run the business for earning profit. They always want to know about their financial position. In order to know the financial position, accounting will help the business person. Accounting means is recording the money matters in a rightful manner. That is, the definition of accounting is, according to AICPA, American Institute of Certified Public Accountants, accounting is the art of recording, classifying, summarizing in a significant manner in terms of money, transaction and event, in part at least of financial character, and interpreting the result thereof. This is the definition of accounting. From this definition of accounting, we will get the features of accounting. That is, accounting is the art of recording. Means the art of recording the financial matters, that is daily record the transaction of business in a book called the journal. Journal is the book of original entry. It is the first entry, that is we record the financial transaction, that is journal. Then recording, classifying the transaction into cash basis, credit basis, expense, income and all. That is, it will be recorded in a book called a ledger. That is, it is recorded under each page called account. Then summarizing all these transactions into, that is, we will know about the financial position. That is, we will through trial balance, income statement and balance sheet, we can summarize the financial position of the business. Then interpreting the financial character of the business, and it will be communicated with the interested parties. Discuss about the features of accounting, that is recording, classifying, summarizing, interpreting the financial transaction and communicate with the interested parties. Means what are the, from these features, that say that communicate with the interested parties. Then who are these interested parties? Means first one is owner. Owners means the person who invests money in the business. They always want to know about their financial position, is profitable or not. So from this accounting, they know about their financial position of the business. So that they are always interested about know about the financial position of the business. Then investors also, the person who invests money in the business, they also always want to know about the financial position. So accounting is an evidence to show that their financial position to their investors. Then employees are the other type interested person, that they always know about the business is profitable or not. That is, they want to know about, ensure that they will get a salary or wages in a secured manner. So they always want to know about the financial position of the business. Then competitors, creditors also want to know about the financial position. They also, so through these accounts, they can prove that they are financially strong. So the creditors are ensured that the business is financially strength. Then banks and creditors, banks and also that they provide loan to the business. The bank also want to know that they are in a position to repay their loan and all. So it is accounts also evidence to show to the banks and all they are financially strong. So they also want to know about the financial position of the business. Then security analyst, they are always want to know about the financial position of the business. For all these interested parties, they are financially interested in the business. So accounting is a proof to show that they are financially strong and smooth functioning of the business. Then another topic in this chapter is the important terms in accounting. Then first term is assets. Assets means material, physical materials, possession which regard belonging to the business. Assets can be classified into fixed assets. Then fixed asset is again divided into, that is tangible means physical existence of types of assets are called fixed tangible assets. That means land and building, plant and machinery, furniture are examples of tangible asset. Then intangible assets, which that it has no physical existence, it show the reputation of the business, that is patents, copyright, trademark are examples of intangible assets. Another topic in this chapter is about the important terms in accounting. That is, one of the term is assets. Assets which shows the properties or possession belonging to the business. Assets can be classified into fixed asset, current assets. Fixed assets again divided into tangible, intangible, vesting and fictitious assets. Tangible asset means which has a physical existence type of assets are called tangible assets. Land and building, plant and machinery, furniture and fixtures are examples of tangible assets. Then intangible assets means it has no physical existence, but it shows the reputation about the business, that is goodwill, patents, copyright are examples of intangible assets. Then vesting assets means mining, coring, that type of assets are vesting assets. Then fictitious assets means preliminary expenses, discount on issue of shares and are examples of fictitious assets. Then current assets. Current assets means which are repeatedly used by the business concern. That type of assets are current assets. That means cash in hand, cash at bank, bills receivable, debtors are examples of current assets. Liabilities. Liabilities can be classified into current liability or long-term liabilities. That is, liabilities means that is due by the business to others. That is liabilities. Current liabilities means which year after year that due by the business concern to others are current liabilities. Means bank overdraft, creditors, bills payable are examples of current liabilities. Then long-term liabilities means that type of liabilities, their duration is more than 1 year. That is long-term liabilities. Debentures and long-term loans are examples of long-term liabilities. Then profit. Profit means income over expense is known as profit. That is, business always want to earn profit. That means income over expense. Then loss means expense over income is called loss. Then goods. Goods means that which is purchase. Liability means that money owes by the business to others is known as liability. Liability can be classified into current liabilities and long-term liabilities. Current liability means year after year repetitively the money owes by the business to others is known as current liabilities. Means creditors, bills payable, overdraft and all examples of current liability. Long-term liabilities means liabilities owed by the business more than 1 year. That is debentures, long-term loans are examples of long-term liabilities. Then another term is drawings. Drawings means cash withdrawn by the owner of the business for its personal purposes is known as drawings. Then goods. Goods means that is purchased for the purpose of resale. Will be stock will be maintained and production, and it is used for resale is known as goods. Goods may be raw materials also means the material or commodity in which the business deal are known as goods. Then purchase. This means goods purchased, raw materials purchased by the business for the purpose of resale is purchase. Then sale means it is through sales business receive revenue, that is sales. Then debtors. Debtors means the person by whom debtors are the person who owes money to the business are called debtors. Debtors are the person at the time of credit sale debtors arrives. That means they are the persons who provide money to the firm. Then creditors. Creditors are the person to whom money owes by the concern are known as creditors. At the time of credit purchase, creditors will arrive. These are the terms discussed in the accounting. Okay, all these are about this introduction chapter, accounting, that we have already discussed about the definition of accounting, features of accounting, objectives, advantages, disadvantages, then important terms. All these are included in this chapter. Okay, I hope all of you understand about this chapter. Thank you.